Good morning, everyone. I'm Vince Lancy, and this is the Gold Fix Market Rundown. It's 8:06. Today's topics, we'll be talking about why we feel gold revaluation will happen based on some analysis mentioned in Michael Hartnett's weekly flow show report. And we'll do a tariff post-mortem for that macro trade that we're talking about that we had on. Macro trade lower left-hand corner, had on, halfway out of it now. And the post on the top right, that's the one we just sent out. It's basically a write-up with a little bit more elaborate thoughts on the revaluation concept that Hartnett was talking about. So let's start with the markets. 10-year yields are down 1. The dollar is 98.43, up 17, but on its lows. The S&P 500 is 64.01, unchanged bid. The VIX is 1575, up 60. Gold is 33.56, down 41, near its lows. Silver 37.78, down 52, near its lows. Copper is 440, down 4, down almost a percentage point. WTI is 64.57, up 78. Natural gas 292, down 4. Bitcoin up 1,000 off its highs of the evening, trading 120 spot 400, and Ethereum actually negative on the day now, 4,192. Palladium up 10, platinum down 10, gold, silver, unchanged bid, grains stronger, soy up 2.3%, leading the pack. That could be seasonality playing it. I'm not really sure, but rest assured, it's soybeans. So you have to figure that out. Okay, here we go. First, why gold revaluation will happen, at least we think. We contend that central banks are eyeing gold revaluation as a balance sheet bailout mechanism as fiscal pressures mount and spending increases. Analysts see gold revaluation emerging as a strategic tool in an era of fiscal dominance and persistent inflation. Hartnett's latest outlook, the one we referred to, highlights structural drivers for this: high debt, inflation, and currency debasement pushing central banks towards gold as a reserve hedge. That's happening now. That's not a prediction. With gold now 20% of global, probably Western FX reserves, and Bank of America seeing the efficient frontier as 30%, revaluation could be used to offset fiat losses, strengthen balance sheets, and give policymakers room to raise rates. Such a move would mark a tacit shift towards fiscal dominance, with monetary policy operating as a brake against ongoing fiscal stimulus. That whole post can be seen in Why Gold Revaluation Will Happen. Related posts, you can see those there. Sunday, we didn't have a commitment to traders conversation, a founders conversation, but we did a write-up for everyone. And as you would expect, the banks got killed, at least on their public books, and the end users, the end user category made a lot of money. See if they got out, but the end users are, generally speaking, refiners, smelters, not truly end users, but we would call them processors, refiners, and smelters. People who are very aware of tariffs and probably saw it coming. China buys more gold in July. We kind of glossed over that last week, but they did buy more gold. I think it's 9 months in a row now that they bought gold. And our coverage of the tariff misinformation. Data on deck, CPI, PPI, and retail sales. We'll talk about the trade regarding CPI. I feel it's a big week because the last big data point we got was the economy starting to visibly roll over. Now, you can be of the opinion that the unemployment, being revised lower and coming in so soft was a one-time thing. You could be of that opinion and you would have merit. But you would also equally have merit, if not more, to say, hey, the dual mandate's a problem now because unemployment starts to crack lower If that were to happen again, it would be bad. Now, do I think Powell is going to wait another month for another unemployment number, another payrolls number? No. Do I think he's going to wait for GDP, which is pretty unreliable? No. Uh, do I think he's worried about inflation still? Yes. And so the dual mandate is at odds right now. And if tariff inflation is finally starting to work its way into the economy, then he's got a problem. So what we said about a week and a half ago was between the bad jobs number, the low jobs number, and August 15th, gold would be bought. And the reason for that was people start to worry about stagflation, and stagflation would be bullish for gold, or people start to worry about recession, and recession would call for a rate cut. So in both instances, gold should benefit. Now, it did benefit. We said this with gold trading about 33.47. And well, the market went up to 33.94 roughly, and futures went up to 35.25. I don't even know where they went anymore, but 35.34, I think. So $100 higher. So mission accomplished. Now, the trade idea worked, right? So did you make money? Did I make money? Well, I had someone in futures, and I was smart enough to take those off. And I have someone in GLD, and I haven't taken those off yet. So on average, it's probably going to be a scratch for me. So um, I'm laughing because I'm crying on the inside. This is the idea, keep your losses to a minimum, be disciplined, and look for the next trade. Move on. I was right. I'd rather be rich, but I was right. Okay. That's the macro trade. Next, let's just go right to the charts. All right. I don't have anything prepared here today. So there you go. There's gold. We're at that imaginary midline, which again keeps coming back. And by the way, that dotted line there, that's my stop. So half my position. And the market got as high as basically 3,400. All right. 33.90 was my first target. And we never got to the second target. So we're in a range. That's all. We're in a range. One thing I do want to show is I want to show you the futures. See this here? This day, this lightsaber, this Star Wars lightsaber, that's what I call them anyway. This is very bad. And I said that in the Sunday conversation. And it's very bad because, it's easy to say it now because we're lower, but I said it before we're lower. It's very bad because on this chart, that's futures, everything above the little green rectangle there was bought and is losing money. So who bought above there? Well, bullion banks bought to cover their EFP risk. CTAs got stopped in to get long because they had a momentum signal, and regular hedge funds got stopped in to get long. So keep that chart in mind. And now we go to gold. Remember, everything above this line lost money. And how do I know that? Because there is no above this line over here. The physical market never got to that price. So this was a venue squeeze. It was a futures problem. And that's the reality of it. So you expect, I mentioned yesterday in that post, I said you should expect there's only two players in this market right now, like Sunday night. And that was banks whoever is buying a dip, which could be bullion banks or physical buyers, and whoever is selling the dip. And the dip selling would be CTAs and momentum funds, and the dip buying would be physical or bullion banks. And the idea is, where will the market stabilize? And the answer is The answer is, well, hopefully it stabilizes here. The answer I gave last night was the market should open lower because the bullion banks will at least wait to see how it opens up to get an idea. And as the market weighs on during the night, if the selling comes in, then they'll let it back off and maybe they'll cover during US hours. The only thing I did say in terms of a price target, I used futures. I said we shouldn't get below 3,400. All right. So we're close to below 3,400. So we shouldn't get. And the reason I said that is because this whole area here, this structure here, which we retested, made a new high and now collapsed. Well, if we get below 3,400 meaningfully, meaning if we spend any time there or break it by, let's say, $10, we could run to the very bottom of the trading range. Remember the trading range? If we get below this area here, with my dotted line, then we work this area here. And we could end up going down as low as, not tomorrow, not today, 32.71. So that's it. I'm Vince, and hopefully everyone's surviving. I appreciate all the comments. A couple things. I appreciate all the comments in the chat. Very active, and I was very busy. Unfortunately, I could not participate like I'd like to, but hopefully I gave you enough content to make up for that. And I also want to thank about 6 or 7 people that treated me to a beer or a coffee or whatever I was drinking over the weekend. I'm going to get I'm going to get a nice dinner out of it. Let's put it that way. And also, a couple of you were very kind to the bartender Liz for stepping out and doing that little video for us. So we appreciate that as well. I'm Vince. Catch you later.